Hi, I'm Sean Santoro from Invest National, down here at this iconic Australian scene, Byron Bay Beach, ready to do a month in a minute and see what's been happening in the finance world. Same with last month, the big headline of this month is going to be interest rates. They've actually been reduced yet again by the Reserve Bank, and now they are at an all-time low of 0.75%. There is a couple of schools of thought on whether this was a good idea or not. Firstly, some people are saying that it is good because it will stimulate the economy and put more money back into the hands of everyday Australians. But the second viewpoint is that things weren't actually going that bad and it may spook off further investment. Now, the other thing that's going to come up over the next couple of months is a term called quantitative easing. That basically means unconventional monetary policy. It's where the government looks at ways to stimulate the economy. There's a number of ways in which they're going to do that, but the bottom line is we need wage growth and job growth. Here's a simple example of this. Let's say that you don't have a job, but you want to go hang out with your mates. Your parents give you $50, you go out, you have a great time. But you're going to run into that same problem next week if you don't have your own source of income. This is what the problem with government stimulus is. If we don't actually resolve the issue of wage growth and job growth, we're going to continue to run into this problem and eventually the economy starts to slide backwards. Now, the reason we're talking about quantitative easing now and not sooner is because the government has basically tried everything. Reducing interest rates hasn't really changed things. There are some global economic clouds that are looming, and the inflation rate has not been where it needs to be for years. So now, things are starting to get drastic. Now, thankfully, this month is not all doom and gloom. There are some good things on the horizon, and this cloud does have a bit of a silver lining. Property prices are expected to go up. In Melbourne and Brisbane, there are some big gains looking to be had. As a result of these lower interest rates, the Australian dollar has also weakened, and that makes Australia a much more competitive place to do business. So we are seeing a lot more international interest in our economy. Now, one of the headlines we're expecting to see over the next 2 months will be about the energy crisis. There is definitely going to be power outages in Victoria and New South Wales due to a lack of supply of electricity. So I'm not sure how that's going to affect things, but we are expecting to see that make the headlines, and it does affect people's willingness to invest in Australia if the energy costs are so high. Even though the interest rates were cut 0.25% to their lowest levels ever, some of the banks still haven't passed that on to the consumer, and that really upset our Prime Minister Scott Morrison. So thanks again for joining us from the easternmost point of Australia, Cape Byron. We'll see you all again next month. As usual, if you need anything or have any questions, please don't hesitate to give Invest National a call. See you soon.